Hey guys, welcome to the Startup Tank Climate Investor Pitch Show, the premier online pitch session for climate companies. If you are building a company that's changing the world for the positive, be sure to check us out at thestartuptank.com. I'm your host, Matt Ward, partner and syndicate lead at Forward VC's Climate Syndicate. To learn more about us and what we do, just visit 4ward, so the number 4ward.vc. We invest in companies that move the world forward, like some of the incredible companies that we have here today. So who do we have for you guys today, and what exactly is the Startup Tank? Today, we've got 6 of the most promising climate companies here for you from around the world, companies from pre-seed all the way up through Series A. Although we focus really early stage, pre-seed and seed, because that's where we see the massive potential of really early stage investment, as well as that's where our Climate Syndicate likes to invest. But it's not just us that are here. We need more funding in general into the space, and we need more experts as well looking at these great companies. So I've invited 3 investor panelists to join on the panel. The companies will pitch to us, and they'll have 5 minutes each, followed by 10 to 15 minutes of investor Q&A. And then at the end of the night, we'll pick a startup of the night. The 4 investors of us. So our panelists include Jonas, a personal friend, Jonas Horning with WeVenture. I'll let him introduce himself a little bit in a second. I met him through a deal flow sharing call that we organized through Forward VC. Thor or Tore, I'm not entirely sure how to pronounce it. I'm going to go with Thor and let him correct it for me. He's with Leanox VC. Pretty interesting investor in the space. And then last but certainly not least, we have Lilia, and I'm not even going to try to get your last name because I'm real bad with names. She's with Shell Ventures. We thought we should bring some corporate muscle to the table as well. Everybody, thanks for coming. Thanks for joining our panel. Lilia, I'd love to let you go first. Can you tell us a little bit more about who you are, so the investors watching and the founders getting ready to pitch know?
Absolutely. Well, thanks for having me, Matt, tonight. I'm investment manager with Shell Ventures, a corporate venture capital fund. We invest across 3 verticals: power, mobility, and resources. Within power, it's renewables, distributed energy, power trading, marketing, and storage solutions. Within mobility, it is within infrastructure, EV, mobility as a service, alternative fuels, aviation, hydrogen. And within the resources, we look for technologies that are applicable to Shell business, and that is typically upstream chemicals and manufacturing spaces. There is also horizontal that goes across those verticals. It's emissions management and also digital, which includes AI, industrial AI, and cybersecurity, etc. So we invest primarily in Series A and B. However, we do explore opportunities all the way up to pre-IPO. We typically seek synergies with wider organization or some form of deployment value. As you may have heard from media, we're a large fund, $1.4 billion, investing internationally, but primarily in North America, Europe, Israel, China, and India. That's us.
Thanks for clarifying. Thanks for sharing what you guys are doing. And there's definitely going to be some interesting startups here for you, I think. Thor or Tore, I'll move it up to you next. Do you want to tell us a little bit more about you and about Leanox?
Sure. Yeah, you can say Thor. That's fine. We are an impact fund from Barcelona. We started only 1.5 years ago with our investments. And we raised our first fund now and employing our capital into impactful companies from Europe. We have also 2 companies from the States that we invested in. And what's I think super exciting is that we are raising our next fund by the end of the year, and we want to make it female-led. So we want to have we want to have most of the investors as females, because currently I think they only represent 2% of all investments. So we want to really drive female investing.
Awesome. That's I didn't know you guys were out of Barcelona. I lived in Barcelona for a while. Such an incredible city.
Yeah, super nice.
And then Jonas, I got a fellow doc investor here. Jonas, can you tell us a little bit more about WeVenture and what you guys do?
Sure, Matt. Good to seeing you again. and thanks for having me. I'm investment manager at Venture, a German climate tech VC initiated by Matthias Wilmbacher, a pioneer in the renewable energy space. We invest mainly in energy, their energy efficiency and energy storage, mobility, e-mobility, and last mile logistics, carbon removal, and green fintech solutions. We primarily focus on seed stage with an initial ticket between 200 and 500K. We also can do follow-on tickets up to 1.5 million. Geographically, we focus mainly on the DACH region, but opportunistically also in Europe.
And a little bit more about us. So I run Forward VC. We're actually a climate syndicate, which means we get interesting and interested investors from around the world who want to put their money to work in early stage world positive companies, and they invest alongside us in some of the most promising companies of today and hopefully tomorrow. We actually have a special investor only pitch session that we're doing tomorrow night. I can't really share more details about the company, unfortunately. None of this is investment advice. None of this is solicitation. I'm just putting that out there as a kind of a cover-all for all the investors here and all the startups here. But if you want to learn more about us, what we do, and potentially apply, visit forward.vc/syndicate. So the number forward.vc. Remember, we're investing in companies that move the world forward. And if you're a climate startup or climate founder and want to connect with other players in the space, you could join our Startup Tank Slack. So the startuptank.com/Slack for one of the, I think it's the fastest growing climate tech founder Slack out there now. We launched a couple days ago and we're at like 300. It's going very nicely. And if you want to connect with other awesome people in the space, that's where to do it. But we've got some awesome people in the space already here, and they're going to get to pitch. So now it's time we move over to the startup side of things. I like to reward people for being the early birds, so to speak. So we're going to move things on to our startups of the night. Today, we've got Jeff Bonner with CapCO2 Solutions. Jeff, you want to take things away and share what you guys are doing? I will make you the spotlight and you can share your screen.
Very good.
Just let me know when you're ready. You'll have 5 minutes on the clock, and I'll give you a 1-minute warning. If I remember to, I'll try my best before your time is up. Does that sound good?
Very good. Yes. Can you hear me okay?
Loud and clear.
Okay. Okay, is everyone seeing the main screen there?
Yes, you are good to go. Just make sure you start at the front. Your 5 minutes starts now.
Very good. Okay, I'm Jeff Bonner. I'm the CEO of CapCO2 Solutions, and we're enabling green methanol, the next sustainable biofuel, we say. So you might be saying, what the hell is green methanol? As illustrated by the family on the right, methanol is used in thousands of household items, construction materials, industrial chemicals, and even as fuel. We're making it net zero. Right now, pretty much all the methanol in the world is made with fossil fuel. And current methanol is unsustainable. For every ton of methanol you make, approximately 3.7 tons of CO2 are put into the atmosphere. It's just not workable. It must be addressed. So the key to leverage the CO2 the key to make methanol net zero is to leverage the CO2 capture of plants. Plants grow by capturing CO2 from the atmosphere. That CO2 is called bio-CO2. The same amount captured is returned. It is literally net zero. And that bio-CO2 is magical. Ethanol plants are a place that concentrates, purifies, and then throws away huge amounts of bio-CO2. That's our opportunity. We can capture that waste bio-CO2 and turn it into green methanol. The green methanol allows us to make things like diesel fuel replacements and other methanol materials, and it's net zero. It goes, as it's burned or consumed, it goes back into the atmosphere like the CO2 was going to anyway. So who's buying green methanol? Maersk has just built 6 ships that run on green methanol. They signed a large contract to ensure they have enough green methanol to run them. Hexion is a big chemical manufacturing company. They have signed a large contract to ensure they have enough green methanol to support their sustainable resins product line. Even John Deere, the farm equipment manufacturing company, has invested in a company that builds engines that run on green methanol. Okay, so CapCO2 is going to be using the wasted bio-CO2 from ethanol plants. There are 200 of those plants in North America. Each plant is wasting 150,000 tons per year of bio-CO2. That's a potential of $110 million of new revenue for each of those plants. We're currently in conversations with the world's largest bio-CO2 emitter, that's POET, which runs 33 of those ethanol plants. So that would be an ideal location for our first pilot plant. And about me. So why am I doing this? I'm passionate about building solutions to solve complex problems that, and I've turned that passion to the climate crisis. I've built big, complicated systems requiring diverse stakeholders to work together. So that communication is a key part of what I'm bringing. I'm focusing my expertise on the technical and real-world components necessary for a profitable and sustainable green methanol. I've assembled a great, like a dream green methanol team. Nicola.
1 minute warning.
Nicola is effective at building chemical industry partnerships. Michael is a father of regenerative and organic agriculture and deeply wired into the ethanol ecosystem. Siobhan is an agricultural engineer, great at the technical parts and actually also the community parts. And Jeff Waugh is an expert at biofuel logistics. So we're asking for $500,000 for a 1-year project to build a pilot plant. The mechanics of that are a site, signing up and confirming the off-taker, picking the right equipment among the various options, and arranging the financing. So we're CapCO2 Solutions. We're turning waste bio-CO2 into valuable green methanol, and I'm open for questions.
And you hit that in 5 minutes. Wow, that is very impressive. I'm going to bring our panelists back in. I'm sure they've got questions. I know I absolutely do as well. While I'm bringing them back in, my first question, and that's something I didn't see in the deck, is how are you guys converting bio-CO2 into ethanol? And then I'll hand things over to the other investors once you clarify that.
Yeah, the basic thing we can leverage here is the existing methanol equipment, which mostly runs on fossil fuel, can in theory be easily adapted for the green methanol process. All the manufacturers insist that their equipment will be perfect. They want to work with us to prove out that their equipment can be adapted as easily as they say. So that's our plan, is to pick one of them based on the site and other details.
I meant more, how are you converting the bio-CO2 into green methanol? Sorry.
Well, okay. So you want me to go into more detail on the technical process involved?
Yeah, just in terms of how that works.
Okay. So to make green methanol, you have to have bio-CO2, which I've talked about. You also need to have green hydrogen. So you need renewable power that will create green hydrogen on site or a source of it. And then you feed that into the methanol equipment, and that produces green methanol. Does that give you enough detail?
I think so, at least for now, but I just want to hand things over first to some of the other investors. I think Lilia is probably the place to start.
I could go on for a long time. It's just I'm not sure the right level of detail for this group. So,
No, a question related to what Matt just asked. One of the inputs is green hydrogen. But how would this fuel compete with hydrogen itself as a use case in marine, in commercial vessels? So from a use case perspective, what's the advantage of using methanol as opposed to hydrogen as a fuel?
Yeah, hydrogen is hard to manage and deal with, as I'm sure you well know. You need to build completely new engines. You need to build new infrastructure. Green methanol can be used in diesel engines with minor modifications. We've been told for $3,000, you could take a large transport truck and turn it into a dual fuel green methanol diesel engine. And so it's drop-in decarbonization. And so, over the long term, how green hydrogen is going to play out and will it really displace everything else? I don't know. But in the short term, you'll definitely need the green methanol as the transitional fuel at the least. And then you have the whole chemical manufacturing supply chain, which is heavily dependent on methanol. And that's a place green hydrogen is just not going to handle that problem.
Gotcha. If I can just follow up on this. If I understand right, there should be a renewables installation, right, to generate green hydrogen. And then also hydrogen goes as a feedstock into the production process. So in terms of cost, how will, for end users, how would that compare to the fuel they currently use? Would that be that cost, same amount of money, or?
It would be comparable. What we've worked out is it would be comparable to diesel fuel, maybe a little cheaper than diesel fuel. It also has a little less mileage per gallon than diesel fuel. So I think that would net out fine. And again, it's very hard to project out the economics of how it's really going to play out with if there was an active green hydrogen cluster, this would be an ideal place to put a green methanol plant because you could convert some of what that green hydrogen is making available. You could convert it to something that could be transported easily off the site and also could support chemical manufacturing on that site. So we see the green methanol ecosystem will be huge. For now, drop-in replacement for diesel fuel is the most obvious immediate need.
Gotcha. Thanks, Jeff.
And Thor or Jonas, do you have any questions for Jeff?
What's your guys' distribution network at the end? So who would you ideally sell this to?
I don't know who we'd ideally sell it to. The initial plan, there's two initial plans. There's local chemical manufacturing companies, and by local, I mean within a few hours drive, so you could send a tanker truck to them economically. There are also corn farmers who use a huge amount of diesel fuel and have lots of diesel-driven equipment. So both of those are viable options. We really have to get into the details, and with the recent Inflation Reduction Act, there's some incentives for the green methanol as a replacement fuel. So all that has to be worked out in detail. And, again, we're still guessing about what's the right choice. But for the pilot plant, we'll be selling it one of those two ways.
And with the current conditions, with fuel prices are super high at the moment, right? Would you have a significant advantage in comparison to normal diesel fuel right now?
We would have a slight advantage. And again, the other thing I need to be careful about here is, someone like Maersk is paying a lot of money for green methanol right now because they really need it for their sustainability plan. So it's really hard to predict. Again, I just want to be honest with you, Thor. It's really hard to predict how are those economics going to play out in the next 2-3 years. Over the long term, it'll be very competitive. But in the immediate term, there's all kinds of economic forces that could push the number really high.
Thank you.
But if it pushes the number really high, that's good for us. Then we have people, bidding to get the fuel. So that's not a problem either, really.
Perfect.
Jeff, from my side, thanks for the presentation. I would have a question regarding your business model. I've seen on your website that you have like a kind of on-site assessment of the ethanol kind of plant, but you're also going more towards like a marketplace play. Could you elaborate a bit further? What's your business case, and also how you want to scale this in the next couple of years?
Very good. As you probably noticed, my background is in computer science. So the original plan here is we were going to build a two-sided marketplace for green methanol and other biofuels. And then we found out there's not enough of a market there to have a marketplace yet. It's too much of a scattered, preliminary market. So we figured, okay, well, let's build some sites, particularly at a place in the US where there's a huge wastage of bio-CO2. It's just a really hot opportunity because there's so much pure bio-CO2 in one place. Over time, we want to package up that. Matt suggested a franchise model, which sounds right. So we'll have a way to quickly build green methanol plants. We won't be the builder per se. We'll encourage local sites to build their own, and then we'll be managing the market of that. So that's the big picture plan. But again, we're early on. I'm not ready to, over time, that'll be the business model. In the short term, we think we can very profitably build these plants and get enough of them up and running that we could move on to a more bigger marketplace view of the whole thing.
And a follow-up question in terms of manufacturing, do you want to outsource this? Are you working with third parties together, or is the plan to actually build this in-house?
Well, we will definitely be working with methanol equipment makers. Everyone from Air Liquide, Pentair, those are two we've had fairly in-depth conversations with. The question is who do we really want to work with, and whose equipment can best be quickly adapted to green methanol versus its current fossil orientation. And so we'll be making that decision once we have a site pinned down. Then we'll know what's going to work best for that site.
Speaking of what works best, I want to move it on to our next startup of the night to make sure everybody gets their chance. And also because, well, this one might be interesting for you. I think it makes sense to hand over to Eric Shroud and GenHydro to share a little bit more about what they're doing. Thanks for sharing everything you're doing with CapCO2, and you might need to talk to Eric after the call. Eric, you are ready to tell us a little bit more about GenHydro and what you guys are doing?
Yeah, absolutely. I had a feeling you were going to kick it off to us as soon as I heard him start talking.
I think it's a good transition.
It seems like, yeah, it makes total sense. Great presentation. Thank you so much. All right, I'll go ahead and get set up here. And I'll let you know when I'm ready. One second. All right, can you guys see my screen yet?
Not yet. Now your screen is coming through. And you should be good.
All right, ready when you are.
Your 5 minutes starts now.
All right, everybody, thank you so much for your time today. My name is Eric Shroud. I'm the founder and CEO of GenHydro, a green hydrogen production company. GenHydro is a renewable energy project development firm whose core competitive advantage is solely owning a novel and highly economic green energy production and distribution technology. Here's a quick snapshot of the core team that have been integral into helping us develop out the business model to match the pain points in the market, as well as do business development work to get us early clients, and then also push us forward on the technology development front. Oops. Sorry, it froze a little bit. Okay. All right, so GenHydro focuses on waste to hydrogen. And we do this so that we don't increase the carbon footprint as the world is trying to decarbonize and transition. So we actually source, oddly enough, for maybe most of you out there, recycled scrap aluminum alloys, which happen to be just highly ubiquitous and in every single post-industrialized nation. So GenHydro sources these scrap aluminum materials from waste processing facilities, household waste, or industrial producers of waste. We have a patented technology that actually processes that scrap material from siding to fences to window treatments. We process it down into the right format, which would actually be fines or fine powder material, pre-mix it with our GenHydro promoter, and then now we have what's called a solid fuel. And so getting to the issue of, as I've spoken about before, hydrogen being a kind of a tricky molecule for, in terms of being a distributed energy medium, we actually take the approach of taking renewables, producing a solid fuel, and then shipping a solid fuel. You don't have to compress it. You don't have to worry about any hydrogen leakage. You don't have to worry about liquefaction. You can FTL it. You can treat it just like coal, except there's no carbon involved at all. So we have a solid fuel that is very energy dense. Compared to liquid hydrogen, it's a megawatt off per truckload, which is pretty good. So 207 megawatts versus 208. Then the solid fuel goes into the GenHydro reactor, and this is our patented technology as well, which is a hydrothermal process for extracting 85% of the energy out of the solid fuel or the aluminum alloys that it took to originally make it, but in a totally green, non-toxic way. So we can roughly get 10.5 megawatts per ton in the form of distributed or diverse type energy, electricity and hydrogen. And I'll explain a little bit more of that in a minute. Quick fun fact, though, there's a couple on the bottom, but quick fun fact. Since we source scrap material, there's, according to the U.S. Geological Survey, there's 9 million tons of aluminum scrap that's landfilled every single year in the U.S. alone. So plenty of room and a high ceiling for GenHydro to pursue scrap until we vertically integrate. All right, so how does it work? So the GenHydro system is a hydrothermal process. So the reactor is hydrothermal. We take these aluminum alloys that have been sourced, processed, put into the right format, pre-mixed with GenHydro promoter, goes into our reactor. And then thermodynamically, we provide the right activation energy to basically rapidly rust aluminum. And so believe it or not, aluminum can rust. It turns into alumina, which is just an oxidized aluminum, which is similar to like the irons that you see rusting out in probably your everyday lives, except we do it rapidly. So we take these materials, we rapidly excavate what's called a cohesion passivation layer. We remove basically that protective layer that stops it from reacting with water. We oxidize it under the right conditions with H2O. And so basically we're breaking the covalent bonds from H2O, bonding it with the aluminum alloy, now liberating the hydrogen. And so now we have hydrogen production. But what's fantastic is that process also is very exothermic. So the chemical reaction produces a lot of heat as a byproduct, except under the right conditions. With
40 seconds, sorry.
No problem. With the GenHydro takes advantage of, we can actually extract that energy, produce electrical energy and hydrogen, as well as producing advanced ceramic material. So GenHydro currently has a commercial pilot system. So just looking at our TRL level to date, we have a commercial pilot system at GenHydro. It looks like this right now, currently being installed, it's being wrapped up, produces 4 kilograms per hour of hydrogen and 240 kilowatts of electrical energy, which is the average US home uses around 29 kilowatts per day. So projects under contract right now would equate to 27 tons of hydrogen, 36 megawatts of electrical energy, $121 million in revenue, and 34 in EBITDA. And I know I'm up. Sorry for the.
You are up. No worries. So
yeah, there was a little bit of a
million.
freeze there, but yeah. So a little bit of a raise. Take a look at it as I guess we move on.
Yeah, I'll go slow with bringing the investors in so everybody can see that.
Thank you.
So while I'm bringing the investors in, I think it makes sense as well to kick things off with Lilia and Shell Ventures here. Lilia, do you want to start on the sharking, so to speak, for Eric? Got any questions?
Sure. Thanks, Matt. Thanks, Eric. Great presentation. Question on costs. So how does that hydrogen that you produce compares to, for instance, green or blue hydrogen? And also, if you could comment a little bit, what energy do you use as an input to run your reactor?
Yeah, it's a good question. So we actually joke around in the office, we call it clear, because there's zero carbon involved at all in the process. It's literally just aluminum alloys and H2O. And so there's no carbon involved at all. Even the electrical energy that's produced out of the system, there's no carbon involved. Every single plant does have a sap or something that leaches some energy just to run the plant. And so there's minimal energy involved in the milling system that mills the reactant to the right format. And then obviously there's transportation, et cetera, of that material. But that's things you can't get away from even with hydrogen. But it's a lot less, obviously a lot less carbon intensive. It's mainly just on the production and distribution side of the alloy itself. So
the reactor runs on the electricity you mentioned, right?
No, it's so the reactor, it's very interesting. It takes, there's thermodynamic conditions. So we have to get the reactor up to operating conditions at first. So it takes an external energy input at first. After that, the reactor continues to run on its own as long as you're introducing new aluminum alloys and H2O. So, and then, so then it doesn't require external energy input as long as you're feeding it. So the energy is the aluminum alloy itself.
Right, I got you. And if you could talk us through a use case and what capacity enterprises, as in how much do they need? What size of enterprises are the end users of this technology?
Yeah, so we have 7 projects in the pipeline right now. 2 of them are being executed on next year. One is a large auto manufacturer, which we can likely release what that's going to be, who they're going to be by the end of the month. Another one is a large they're in the UK. Another is a large tool manufacturer in the US. All household brand names. So those projects we're starting pilot, and then phase 2 will be 20 megawatts at the auto manufacturer site. And so we go by electricity production. And that'll be roughly 15 tons a day of green hydrogen. And then the large tooling manufacturer is going to be 26 megawatts altogether. And that's going to be 4 sites. And then we're moving to all 16 of their sites in the US. And then, and that'll be roughly 26 would be roughly 18 megawatts or so. I'm sorry, 18 tons per day of hydrogen. So those are, we're starting off with pilot, we're moving to like 5 megawatts, and then we're moving to 20, which is full bore. But we also have some projects in the pipeline that are 50 megawatts, 100 megawatts. So since the systems are modular, you would put them in series, we put them in series like a solar array. Yep. And then we attach Siemens turbines or GE turbines on the back end for taking advantage of the thermal energy. But we have a 300 megawatt project that we're developing in Melbourne for a data center as well.
Great. And last question from me. Are these customers of yours, are they the ones who need hydrogen or who have aluminium, basically spare aluminium waste that you need? What is the intrinsic interest, or is it both?
Yeah. Well, obviously in Europe, there's a massive energy crisis there. And so what's nice about us is we co-site our technology, and we can completely control the energy costs. And so we can sell at like United States wholesale rates and be profitable in Europe without, and it's levelized. It's a power purchase agreement over the course of 10 to 15 years. And so there's energy security there in terms of pricing. And so it's primarily been on the electrical side, but then also on the green front. Hydrogen is kind of the gateway drug that gets everyone interested, but no one has, at this point, not a lot of people have the ability to use the hydrogen necessarily. So phase 1, it's hydrogen gets them in. And then we end up talking about their electricity, converting them over 100% to baseload green renewable energy for electricity. But then we also, after that, we go into the discussion of converting over their existing operations wherever we can to using hydrogen on site, which also saves cost on having the virtual pipeline, having to ship and distribute. But then we work with local LDCs because we always have excess hydrogen. So we end up becoming these decentralized hydrogen hubs, like across the US, simultaneously building out the hydrogen infrastructure. So we work with LDCs to pick up the excess capacity and then ship and distribute to other organizations until at least mobility picks up, which is our primary focus.
Right. So if your customer is not interested or does not have where to use hydrogen, you can actually take it away and then sell it.
Exactly. There's still, then we can still get a power purchase agreement for the electricity. We have 24 off-takers for the advanced ceramic material, which is the reactant after it's spent. And then there's plenty of hydrogen companies that are local, at least for the smaller amounts that we'd be producing on a decentralized basis, that will use hydrogen mostly in chemical, mostly in industrial chemical. And our target for us is to kind of eventually build up those to move to transition to mobility.
All clear.
Over time.
Thanks, Eric.
No problem.
Jonas, do you want to go next?
Yeah, sure. Thanks, Eric, for the presentation. First, some questions for clarifying the pilot projects you were talking about. Is this Gen 1 or is this already the next generation you were talking about? And second question, is your business model in the end to operating the systems on yourself?
Yeah, great questions. So you definitely caught on. So we have a couple of generations, which are showing the technology development. That would be the pilot system. These pilots would have the commercial pilot system that are going in. In fact, we already have a larger reactor being built, and so it'll likely have the next version of the system we currently have in-house. So it'll be 16 kilograms an hour at 700 kilowatts of electrical energy. So that's our target for the site in the UK and Liverpool in January, and then also for Jackson, Tennessee in February of next year. And so that's the commercial pilot system. Our business model is and this, I tried to cover this as much as I could, but we're not a technology firm. We are a project developer. And so what we do is we get offtake agreements. So we're basically a micro utility that's decentralized. And so we don't sell the technologies, we sell what's produced. And there's a lot of complexity in it, like any kind of power plant. And even though it's micro, there's still a lot of complexity. So we operate, or we work with partners like EPC firms that help give us operating capabilities, or sometimes they call them key card holders for certain companies that have maybe a staff member that can operate the PLC. And then we have a DCS system here that monitors everything. But we acquire power purchase agreements, and then we sell the energy as it's produced over time. We take that power purchase agreement, and then now we can SPV it into an asset-backed security, get bonds for the 70-80% asset costs, and then we equity fundraise the 20 to 30% for the soft costs. And so everything is kind of bonded in all these micro projects, but GenHydro sells what's produced. We partner with the right firms, but we sell what's produced, not necessarily the tech.
That's a lot of moving pieces. Why'd you decide to go that route?
Well, it made sense for the company. And so we vertically integrated and partnered a couple times, and we partnered with a couple of organizations that are that have invested and that are complementing us with some of these areas that we vertically integrated to. And so that's the way we've solved the issue. The reason why we've done it is because the units kind of pay themselves off very quickly. And so you might have, for example, for a 25 megawatt system, I'd opt at like 80% capacity factor, might cost like $60 million to install, including the turbine, but then it'll give you like a $23 million EBITDA every year. And so if we have a 10-year power purchase agreement, it makes sense for us to hold on to the units and to sell what's produced. And so we wanted to go that route because it makes sense economically. And we also wanted to be a hydrogen production company, not necessarily a technology firm.
I didn't mean to steal your spot, Jonas. Do you have any more questions for Eric?
I have, but I would like to go to give the mic to Thor first.
Okay. What is your main input cost there? So you said aluminum in the beginning, right?
Yeah, so we source alloys. In some cases, if we're sourcing from municipal waste processing facilities, we actually get paid to take the trash away. And so we get a tipping fee, but actually our whole model is based off of having to pay for it, which would be the scrapyard level, so industrial producers. And right now we're looking at roughly $700 to $800 a ton. It's a hedge against the elemental aluminum cost and the LME, London Metal Exchange. So it's like roughly 20% is what the secondary markets charge for scrap aluminum. So it's all based off of that. We haven't built in any subsidies or grants or anything, or even tipping fees, because we wanted to make sure that if the markets fluctuated and changed, we could still be profitable.
And then when I looked at the website, the size of the machines, what are we looking at there?
Yeah, they're pretty small footprint for what they produce. So even the next gen, so the pilot system, which is a micro utility, so it includes not just the reactor, but then the balance of plant. It's roughly 7x5 on a skid. The reactor itself is roughly the footprint of a Coke machine, and it gets taller, as we go down the line from, like, let's say the iPhone 1, iPhone 2, GenHydro, like GH1, GH2, and so it goes up to, like, right next one is 115 inches. One after that is like 180, but still roughly the size of a footprint of a Coke machine.
Okay, cool. Thanks.
If I may, real quick, Matt, one more thing I'd like to add to your question. The other reason why we decided to go this route for owning and operating is because it reduces a lot of friction for our customers. So now we can work with auto manufacturers who aren't in the energy business and provide them with a decarbonizing energy solution by providing all the CapEx. All we need is a power purchase agreement, and then also owning and operating for them. And so it's reduced a lot of friction going this route as well, in addition to being more economical for the company.
I got you. One question I have for you is what's your story and why are you doing this?
It's a good question. How much time do we have? So I actually got into hydrogen in 2010. The technology's been under development for about 12 years. I am not traditionally trained in engineering, chemical engineering, or physics, but I kind of moonlighted in it. And so I tell everyone I got 6 years worth of schooling and 12 years worth of just experience in doing it. Built my first electrolyzer in 2012, but I got into it for mobility. I was interested in classic vehicles. I had a 72 Mustang, 75 Datsun, and I converted my Datsun to hydrogen by just building an electrolyzer. But it seemed kind of silly to go the electrolyzer route. Sorry if there's anyone who does electrolyzers on the call. Primarily because you have to start off with a potential energy, and then for like fossil fuel, and by the time you get to hydrogen, you're at like 15%, and insane costs. So it just didn't seem to make sense. So I started to pursue the same route that fossil fuels, starting off at a potential energy source that was green. And that's when I got into aluminum alloys, read a DOE article where they said it wouldn't work. We ended up solving all those issues around scale and techno-economics, and then now formalizing the GenHydro. So that quick 2-second story on why I'm interested and how we got here.
And who's the tech genius behind it?
Well, I started the technology, developed it for almost a decade by myself, and then started to hire PhDs that were just much more capable of commercializing it out of the petrochemical space. And so oil and gas, petrochemical primarily though. So now we have a team of PhDs that have helped just refine the chemical aspect of it and then scale it up into an industrial system.
Brilliant and also modest. Any other questions for you, Jonas?
Yeah, sure. Maybe one last question. What are, in your opinion, the bottlenecks and challenges in the commercialization of your product?
That's a good question. We have had zero issue. Every time we pitch to a client, they want it. And like I said, huge household brand name. So we seem to have a good mousetrap, good model. I'd say some of the biggest challenges for us at this point would be some of the logistics. So we don't have logistics capabilities in-house. And so we're working with an outside firm that has industrial scale logistics expertise, and that would be for sourcing the scrap material and aggregating. And then we can process it from there, but then they're still distributing. So we do regional processing facilities that then we would aggregate to, then distribute to all of our decentralized hydrogen production plants, call them, with our clients. So I'd say there's a little bit of that is a little bit of that needs maybe a little bit more attention and work. And we're in a hiring spree, so that's helpful. Other than that, the biggest bottleneck right now for us has been just human resources. And so we don't have enough human capital on staff, and so we're pretty spread thin, which is why we went into a little bit of a short-term capital raise. But technology is moving forward. Clients are super interested, so it demonstrated the friction there, or the traction.
Thank
Awesome.
you.
Yeah, thanks for the pitch. It's a super interesting company, and you guys are raising 3 million now.
Correct. 3 million short-term capital raise for like the short-term needs, staffing, equity finance, a portion of the project that we have coming up next year as well.
When's the Series A planned?
So there's a little bit of a hiccup. We had somebody who had committed to closing this kind of seed B round 6 months ago, but they had trouble just raising their own capital. And so now we're kind of scrambling a little bit. And we've got some people in the pipeline and it's looking like it'll be fine. But Series A was planned to start like September 15th. So we're a little back to back and kind of what we're trying to do is incentivize. We've made a lot of progress. So we're trying to incentivize people for a short-term capital need with a previous valuation. This is a little bit of a discount. And then now we have all these projects in the pipeline and a lot of technological development. And so kind of almost immediately go into a nice 4x return there. Nice.
I don't know if you can say it on the program or not, but can you email me what you guys are looking for? That's one thing you guys didn't have in the application. Sure. I know I find it very interesting. I want to move things along though and be respectful for everybody's time.
Everyone.
Eric, thanks for pitching. Thanks for what you're doing. Great work. But now it is time for us to hand the mic over. While I'm going through that, just wanted to remind you, if this is your first time, welcome to the Startup Tank. We feature the world's top climate companies, as you can see, and we invest in them with Forward VC. If you're an accredited investor, i.e., unfortunately, in most of the world, you kind of have to be rich or the world doesn't think you're smart enough to invest in startups. But if you are an accredited investor or a sophisticated investor, depending on where you live, you could learn a little bit more about us and what we do at forward.vc. And if you're tuned in now, be sure to subscribe. You can subscribe on YouTube. You can also just go to thestartuptank.com/YouTube, and that will bring you there. Subscribe, or you can find us on pretty much all your major podcasting platforms. Google, Spotify, Apple, etc. Just thestartuptank.com/Apple, Spotify, Google, pick your platform. You'll find us there. Now it's time to hand things over to our next startup of the night. And I think for this one, how about we go forward with Al, Sarah, are you guys ready?
Yeah, I am. Can you guys can see me now. Can you guys hear me? Wonderful.
Yeah, give me 1 second to get you and Sarah in.
We don't have a presentation, Matt. It's just us, so you get to watch us for 5 minutes.
Perfect.
Yeah. Thank God I brought Sarah because I'm ugly. So
okay. No worries at all. You guys want to tell us a little bit more about what you're doing? Would love to hear the TeknTrash story.
Yeah, well, my dad was a diplomat. I lived in many countries. I founded 5 companies in 4 different countries. My first I sold to one listed in NASDAQ. My second I fundraised in that famous Sand Hill Road in Silicon Valley. Lost everything. So it's been a fun ride. And I founded TeknTrash when I was living in Barcelona. And I am a biologist. After that, I got a master's in computer engineering. And being a biologist, I know the importance of proper recycling. Today, 8 million tons of plastic make it to the ocean a year. 11% of all the methane in the atmosphere comes from trash. Methane is actually 88 times stronger than CO2 for global warming. And yes, methane is a GHG gas, very important. So again, being a biologist, I know the importance of proper recycling, but I know that this is a failed model because only 6% of all the plastic is actually recycled, which means that 94% of this recycling business is just dysfunctional. That's one thing that we are solving. And another thing that we are solving is that FMCG companies today waste 45 billion per year in failed marketing schemes. And that's basically for us, very simple reason. They have incomplete data set when it comes to knowing what happens to a web product. They know that a product was created in such place, was sold to this place, etc. But after it has been sold, is a total vacuum. They do not know. So we are providing a solution that solves those 2 problems: the ESG problem of products being improperly disposed, improperly recycled, that generates methane, and the second problem that all kinds of marketing schemes that do not work, and $45 billion are wasted each year on that, because you're feeding the computer with incorrect data. In AI, there is an expression that says garbage in, garbage out. And garbage data is one part of garbage data is incomplete data. A data that does not take into account what happens to a product after it has been sold. It's incomplete data. And if you provide it to the computer, it will give you an incomplete result. So, so our team, I think that is really good. Our ESG director, Namdar, has a PhD in microbiology from Imperial College. Sarah, who is joining us here, she was a former global client for Unilever. Our CFO, John, that is always here. You can ask him questions on financials. Has over 20 years acting as CFO for leading companies such as Ernst Young. Jamie, who represents our company in the United States, works for Microsoft, and thanks to him, we became partners, and now we are part of Microsoft for startups, which gave us 155,000. So thank you, Microsoft. And with that, we developed Stipra, which is comprised of an app that captures data, post-sales data, and a smart bin that I will show you a prototype here. I don't know if you can see. If I can give it. This is a smart bin that captures data. We using an infrared camera. It has a ultrasound sensor and is able to identify products and to show how many points you were awarded for this. Sarah, I'll let you explain Stipra because I did it very poorly. Nobody knows what it is.
And a 1-minute warning.
Yeah.
Oh, wow. Then I'm going to have to do it very quickly and very simply. The consumer app captures the data through the camera mechanism in the phone. So you scan the barcode on your recyclable products and you put them in the bin. You're awarded points as a user on Stipra, and you redeem those points against perks or reward schemes that we offer across the app. And at some point, we'll also be offering a cash reward. Just going back to Al's earlier comment on carrot versus stick, the incentive versus the effort is something we have to think about continuously. So naturally, in order to get people to continue to recycle at scale, we've got to continue to incentivize, because while there's a lot of climate activists out there and those who love to do good, there's also a huge population which we can tap into that need a little bit more motivation. We also have a revenue generating business model. So we have a SaaS model, which is corp.stipra, and that's where we engage with clients.
I am sorry, Sarah, but your time is up. We got to get the gong out.
Go ahead. Go ahead. So we ran out of time. That we tried our best.
No worries, no worries. Let me bring in our other investors here. Jonas, Lilia, Thor, do you wanna take over first? What questions do you and Leanox have for the team?
So I think recycling is super interesting topic in Germany. I think it's very advanced already because we have this recycling of bottles, which is super easily made. In Barcelona, on the other side, I live in the city center, and here you just put the rubbish bags in front of your house, like in front of the door. So every night they're lying on the streets, and then they get picked up, thrown all in one and the same car, and nobody knows what happens with them after. So which type of requirements does the government have to have for the system to work? Or how would we make it work?
We are not solving the entire recycling system. Actually, that will require much more than the investment we're looking for. What we are offering is a solution for companies to be able to say three things. First, we care about the environment, and to that end, we will reward you with points you can trade later for stuff, for perks, if you prove to us that you have disposed of our products in the proper location. So an ESG benefit. The second is the data benefit. And the third, which we have closed a deal with German company Climatic, that I'm sure you know because they got 2 million investment from Cherry Ventures, is the Climatic will certify that each company that is using Stipra is getting X amount of carbon decrease thanks to these products being properly disposed. If at the end, like you said very well, it all ends up in one big fat hole, again, it might actually happen. At least companies and the people can say, we did our part. I don't know if that helps. Then
okay,
companies are able to get real carbon benefits and to show their customers that they care, that their products do not end up inside of the gut of some whale.
And the Stipra bin is under my desk, or is it somewhere in the hall? Like,
No,
bigger one?
This is a prototype that we have developed. It is functional. If you go to my LinkedIn profile, you will see a video of it working. You identify yourself with an NFC card. It shows your name. It shows the name of the product that it finds. It tells you wait for points. It shows you how many points you got. So this is just a prototype. We're looking for funding in part, either or for getting what we already have, which is the app, in order to make it happen, to get more users, or to get Stipra on the garbage bin on the road, because this will be connected to Stipra and will also capture data. And on top of that is free marketing, because it's right there and people think, okay, there is this thing called Stipra and we don't need to spend so much money in advertising. The thing advertises itself. So we're looking for funding for either or for each.
Okay.
I can continue.
Yeah.
First question would be, you elaborate a bit on your B2B play that you want to sell to companies, but my question would be, what's your beachhead? Who's your target customer you're selling to?
Sarah, I'll pass you the baton.
Yeah, thank you. So in terms of the clients that we're approaching for pilot partnerships, they are major FMCG brands. So anything that you would find in the supermarket shelf. These brands have a massive gap in product lifestyle understanding, because they have no clue what happens once their product leaves the supermarket shelf. And because we are capturing that consumption data as people are throwing their rubbish in the trash, we can then feed that data back to particular brands that help them either optimize their business on a sales, distribution, or packaging point, but also give them a really good understanding from a geolocation point as to where their products are being consumed or not. Again, having business implications and helps make business decisions. When you have this data at a really large scale, it naturally has a much bigger weighted value against it. So it's much more informative in terms of the business intelligence that comes out of our B2B model. So these companies are super interested in working with us for two reasons. Firstly, because we help them understand their consumer a lot better in terms of consumption behavior. But secondly, going back to Al's point around the ESG calculation, we provide them with an ESG impact based on how their customers have disposed of their products properly. Climatic is a company that we use to do that, but they will pay a pretty penny for the ESG rating as much as they will for the actual consumer data. The ESG is a major issue right now for FMCG companies, because they keep getting hauled over the hot coals on a weekly basis for greenwashing, their lack of sustainability credential. So this is a big draw card for them. And I mean, it was only last week that Unilever was struck off in the UK for making sort of incorrect comments around some of their washing detergent. So the issues can be quite big around ESG. So we're helping them solve that problem with a long-term strategy, which can be tracked and measured over time. But equally, we're really filling that knowledge in terms of consumption behavior, which helps optimize their business. So that's what we sell. And the more data we have, the more integrity we have of the data, and the more valuable that data will become. So while we start on a subscription base right now for a certain amount of aggregated data monthly, that will naturally increase as our data pool increases and the value of our data points increase with that.
Okay, thank you. But this would actually require that you also build the infrastructure of Stripa, right? Your product. How can you otherwise track the products actually? So you would actually need to scale the infrastructure of it, correct?
We use, like I said, we are part of Microsoft for Startups. We got 155,000 in cloud credits and right now we have 4 servers running in tandem, and we can scale this really quick. And then the technology is ready, is in place. You feel more than free to download the Stipra and play with it. You will see that it is really high tech. It identifies a product. As soon as you show the barcode, it vibrates and says, okay, product identified, show the next one. It is really a thing of beauty to see. And then and we are working towards getting more people on board, and that has been a challenge. We think that going to schools and maybe the Stipra bin would be a solution for that. Kids.
Okay, that was my question. Basically,
yeah.
the hardware side of things. Where would you place this and position it? And so you said schools. You said schools.
What do you mean, the hardware?
I think he's referring to the bins, Al.
Exactly. The
bins can go to schools, can go to airports, can go to the bins will be really flashy, will be made of wood, and then they will reward people for it. And it will be ideal for restaurants, for places in which you have these ugly garbage bins that offer absolutely nothing. Instead, you will have an eco-friendly wood base, just like this, the one that you see, you can see that is made of bamboo. And then people will be able to spot them, and they realize, okay, a bamboo made one, it's a Stipra bin, and I'll get points if I dispose something inside. And it will be amazing for airports, for shopping centers, for banks. If I go to 2 banks, one has a boring garbage can and another has a Stipra can that rewards me, I would open my account in the second, because I will feel that my money is more secure in this high-tech bank.
I don't think you would, because you're not going to go into 2 banks.
Yeah,
I just want to push back. No one goes into the bank, so you would.
Yeah. Well, I'm being, I guess, old-fashioned, but yeah. But I could just download Revolut or Mons or one of those things and be done with it. Yeah, good point. Yeah.
If I may jump in, guys, truly this does sound like disruptive technology, but I'm not connecting the dots. So what is the revenue generation model? Who pays for the usage of the data of the app, of whatever intelligence it gives to the end user? And also, who pays for the bin? Who buys actually the bin? Is it the same entity? Because I understand that the bin would be also with households, right? Not only within business premises.
It's mostly business.
How do you understand this a bit?
Mostly business. Go ahead, Sarah. Yeah, you were going to answer.
Yeah, so it might be easy to separate the two to start with. So if we separate the bins and park them here, and we talk about the app in terms of data capture, that's personal data. Like any app, you sign in, you register, and you start using. So we capture all the product data, which is listed underneath who you are, your geolocation, and so forth. The CPG brands that we work with then buy the aggregated data, and they then use that to fund the rewards program that we have in play, which is what each user gets for recycling properly, because they build their points. And they also buy the data itself in terms of, let's just say P&G wanted to know how many households in North London were using Ariel detergent. So we could give them a view on how many, both individual households as well as an aggregated level, are using Ariel detergent and how often. And we can also tell them how many households are using Persil, which is the equivalent Unilever product. So on that side of things, the data provides a lot of opportunity for business growth for our clients. but it also allows them to look at their retailer partnerships in North London to understand their sell-through rate versus what the consumption data is telling them. So it's a really interesting story to start telling. No one else in the world is capturing consumption data like this. So we are filling a gap, and having spent nearly 20 years working in the FMCG space, I can appreciate the value of this data, and I can appreciate the value of understanding that whole consumption life cycle. So that's how we do it. We acquire users by user acquisition campaigns. So in the same way you would go to market and promote the opportunity to earn points for doing something good for the planet, we will get new users through all the media channels available to us. And naturally, with funding, we would then start to invest behind growth marketing into paid media channels to boost it even more. So 20,000 in our database right now. We'd like to catapult that up to a significant volume within the period of 12 to 18 months, because with that growth in user base, we also get the growth in data, which keeps fueling the hunger for these CPG companies to come back and have some of these blank questions answered.
I'll give you a quick example, Lilia. I think that suppose I find 1 million bottles consistently of Coca-Cola Vanilla Edition. I don't know if it exists. And in the town XYZ, every month, the system is finding that people dispose of 1 million bottles of Coca-Cola Vanilla Edition in town XYZ. I can go to Coca-Cola and say, Coca-Cola, I've been consistently finding 1 million per month bottles of your Coca-Cola Vanilla Edition in this town. You want to know which town it is? Coca-Cola may say, no, not interested. Or Coca-Cola may say, yes, I'm interested because I want to know exactly where I'm selling. It could happen that this town, I wasn't selling there because I thought this town would not be the appropriate place. Well, apparently I was wrong. Or Coca-Cola may say, not interested. And being my data, I can go to Pepsi-Cola and say, Pepsi-Cola, do you have a Pepsi-Cola Vanilla Edition? Yes, I do. It competes directly with Coca-Cola Vanilla Edition. You want to know where Coca-Cola is selling? You can go to Coca-Cola and ask, or you can ask me, and I will provide you that data.
No, all good, all clear. So it's somewhat MarTech solution. May I ask, how do you deal with GDPR here, compliance?
So we don't provide any personal data to any of these companies. So when I say aggregated data, there is no PII data moving across. They extract data in a format which allows them to look at it geographically based and en masse at this point. I mean, because of GDPR, we cannot hand out any personal information for users. And when users sign up, it's very clear in that process of registration what we're actually using their data for. And that's why they're receiving the points for recycling as well. So we've made that connection for the users, so that's crystal clear. But yes, we can't get down to household specific data because that crosses the line from a GDPR perspective. But these brands don't need to know that. They need to know within sort of smaller, when you think about an IP node, they would look at it from that sort of level in terms of size and still be able to pull out some pretty interesting business intelligence from the data itself.
Yeah, we provide 4 data: age, gender, geolocation, time and date of disposal. And companies go to corp.stipra.com, they create a campaign, and they're able to see on real time on a map each time a product is disposed, and they click on it and they'll see age, gender, time and date, and the geolocation of when that product was disposed. And they're able to export it in CSV file to compare it with the regular sales data, because we provide post-sales data. And this is the beauty of it, that they are able, from matching their regular sales data with our post-sales data, they are able, for example, to avoid customer churn for a new product.
All clear.
And one thing to clarify as well, because I talked with the team previously, you guys also have a scanning app for consumers, so it doesn't have to be with the trash can.
That's exactly right. That's where the volume play is. The app is the volume play. That's what we're scaling, is the app.
The trash can is just a prototype. At one point, we would like to make it happen, but right now we need to focus on what we already have, which is working great, which is the app.
Just as a piece of feedback, I wouldn't waste your time in the pitch talking about the trash can for future pitches.
Yeah.
Until you're further along. Just my blunt feedback. Sorry.
I thought it was so cool. I thought it would impress.
It's very cool, but you guys got a long ways to go to get there.
Yeah.
Any questions from other panelists?
Okay.
Then I think you guys answered a lot of my questions as well, and the other questions that I had answered on a call another time. Super interesting what you guys are doing. If you can pull it off and thread the needle, then getting consumers. This is actually incentivized to do the right thing in a Ponzi scheme for the planet. It's not bad. Now I want to pass things over. So we were talking a little bit of sustainability, recycling. Why not go even deeper into that and hand things over to Finch? Finch, the way to find sustainable products, the ones you should be buying, and make things a little bit easier for everybody. You want to take over, Lizzie, and share what you guys are doing?
Thanks so much. Yes. Can everybody hear me and see my screen?
Looking good. I will start. You have 5 minutes on the clock. Good luck.
Fantastic. So it's nice to meet everybody. I've been in the sustainability space for my whole career, passionate really about climate mitigation in the private sector and what companies can do to reduce their carbon footprint. So after getting an MBA and a master's in environmental management, I went to go work for Unilever for 3 years on their supply chain team and then on their sustainability team. And while I was there, my friends and family were having problems because they really wanted to know how their products were impacting the environment. You know, what type of diapers should they buy for their newborn, or what the real deal was with aluminum in deodorant. And after asking me a bunch of questions, I didn't know where to direct them towards, because you had these wonky academic papers, which are tough for normal people to understand. And then on the other side, we have this rise of bloggers saying things like eco-friendly, chemical-free, which don't mean anything and are not based in any type of data. And so I really wanted to find something that was based in science, but also accessible to the normal human being. And that's really how Finch was born. And so Finch is sort of a two-sided marketplace, and we do two things. The first is we decode product sustainability for shoppers. So we generate science-backed scores on a scale of 1 to 10 that gives consumers real information on what they're looking at and alternatives. And then through this extension that I'll talk about in a minute, we're decoding sustainability for CPG brands. So we're helping them understand what the willingness to pay is for their consumers, what their consumers are most interested in seeing, and how their greenwashing is actually negatively impacting their entire company. So we have a browser extension where it works on Chrome now. It's unfortunately only in the United States, but we're growing globally quickly. And when you go on Amazon.com, you're able to type in a product, see its score, and then make alternative choices if you're interested for more highly scored products. So the big picture here is today we're scoring consumer products through our extension, helping users buy products that are better for the planet. As we do this, we collect a lot of really valuable data on, as I mentioned, willingness to pay, preferences. Are people more interested in waste or in water or human health? We package that data, we anonymize it, and we sell it to brands. And over time, the overarching goal for Finch is that we will improve the CPG industry so that any product that companies are making, they have the right information to make the best decisions from manufacturing all the way through. So how we rate, we take several thousand data points. We look at a product category overall. So let's look at detergent, for example, and we figure out what are the impacts of detergent. Is it shipping? Is it packaging, materials, ingredients, etc.? We weight those quantitatively based on what the scientific literature is telling us. And then we split that up into 6 different scores. And you can see here climate, ecological, well-being, raw materials, waste, and water. Each one of those gets an individual score. We then feed that information in a machine learning model, and then we scrape the public domain for anything we can find about a specific product. And so it's highly scalable. We've rated millions of products in 85 categories. We've been lucky enough to get a lot of recognition. I've been on the Today Show twice, and we're quickly becoming that known party who has information on sustainability when it comes to consumer choices.
1 minute warning.
We have a fantastic partnership with Microsoft Bing, where when you go on Bing.com, that's 2% of the world that uses Bing. We will. You can look at certain products, and then Microsoft will surface the Finch scores, and so it's incredible visibility for us, and it just shows that retailers are really craving this type of information, and that's our business model, where we charge companies for our data. We are currently raising $3 million in a seed round, and that will get us 14 months to our Series A to really build out this rating system and expand on different retailers, expand our category base, etc. And that's it.
Awesome. Thanks for presenting. Thanks for sharing what you guys are doing. Let me bring in our other investors here. While I'm doing that, what is your target? What do you need to pull off a successful Series A?
We need to get more users, which means we need to have more product categories rated for the most part, and we need to be on more retailer sites. And so right now we're just on Amazon. We'd like to expand to Target, Walmart, Sephora, etc. Once we do that, it will be much easier for us to have user acquisition, have our costs down. And once we get to 10,000 users, we'll be able to really package that data and sell it to brands, which we need to prove in our Series A.
How did you get Bing on board, and what's the partnership look like? Is it paid?
Bing reached out to us. They heard about us probably through the amazing PR that we've gotten, and they really want to be a leader in sustainable search. They want their consumers to be able to make better purchasing decisions. They don't have the resources to do that in-house. You know, a lot of people think a big company like Bing, like Microsoft, would have all the resources at their disposal, but it's been surprising that companies like Microsoft, Amazon, et cetera, really would rather a third party take care of this. And so our partnership with them was an integration fee and then a monthly fee over the next 2 years. And that monthly fee is based on the 85 categories that we've rated. And so as we expand, we'll charge more for that.
What's the monthly fee for 85 categories?
That's confidential. I can't share that information, but our total revenue thus far has been around $200,000.
Okay. So it's like 10K, 15K a month. Lilia, Jonas, Thor, do you guys have questions? I'll hand things over to you.
Yeah, I'll ask follow-up question on revenue to the extent you can share, Lizzie. So what about your next 12 months revenue? Your pipeline, basically. Your pipeline. Yeah.
Yep. So we're currently talking. We have probably 15 companies in our short-term pipeline right now who we are all talking to, including Walmart, Target, Bed Bath & Beyond, the ones that you can think of. Google search, of course. And with all of those, it's a similar model where it's an integration fee and then a monthly fee based on how many categories they're interested in. So we're talking to, for instance, some baby brands. They're not interested in all 85 of our categories, so that monthly fee would be less. That will take us through over the next 8 to 10 months. And then ideally, we would have enough users on our extension side to also package the data that we're selling back to the brands. And that, it's a different type of data, but it's the same setup where it's an integration fee and then a monthly fee.
Gotcha. Lizzie, and what about international expansion? So presumably you go to Asia. Is it going to be as easy for you to analyze whatever products they have there in China, in Japan, and rate them?
Yes. First of all, that's a very huge priority for Bing. Microsoft, as you know, is an incredibly global company, and it's important to them that we have a global scale. And so the lucky news for us is that they'll incentivize us to really go internationally, probably sooner than we would have expected to. The difficulty right now is that our ratings are based on our consumers living in the United States. And so it's less about the difficulty with products made in Asia. Plenty of the products we're surfacing are made in China and all over the world. But that's based on a shipping footprint that goes back to the United States, because we're assuming our end user is there. So the difficulty will be creating an algorithm that says, okay, this consumer is based in Australia, China, etc., and the product is being made in XYZ country, and so how we sort of triangulate as opposed to just having a one-way to the United States, if that makes sense.
Gotcha. And one last question from me. So are you, when you're engaging in conversations with prospective customers, so are you targeting producers of goods, or are you targeting marketplaces? So when you're going to talk to Amazon or Walmart, are you suggesting we would rate all or most your products, whatever is your capacity at that given point in time? Or are you going to Procter & Gamble and saying we will rate your products, and whenever you sell them anywhere on any platforms, they will be rated? How?
It's mostly to the marketplaces. If we're rating Procter & Gamble's products regardless, because we need to do that for Amazon, and so Procter & Gamble probably wouldn't pay to have their products rated because it's happening anyway, and they can find those scores on Amazon. And so it's really to those marketplaces. If you think about sort of climate pledge friendly, which is Amazon's sort of green ratings versus clean by Sephora, and then a couple of others, they all use different definitions, and they all don't have a chief sustainability officer in-house. And so it's really beneficial for them, from our several dozen conversations, for those types of companies to just outsource it. It's much less expensive to pay us than it is to build this out in-house for them.
Right. Great. Thank you, Lizzie.
Can you sell the comparison data to the brand? So you've got all of these different searches that are coming up. You could sell the click, almost A/B testing information. So Coca-Cola can see that 76% of consumers are clicking on the Pepsi one versus the Coke one.
Yeah, that's the incredibly valuable data that we'll get from the insights. So it's not only that example, but it's also, 20% of people searched for Tide detergent and ended up going with 7th generation. That's information that Tide does not have right now, or 7th generation for that matter, right? They're seeing who's buying it, maybe, but they're not seeing what the journey was and how many people decided not to buy and chose a competitor instead.
Awesome. I didn't mean to hack in there. Jonas, do you want to take it away?
Yeah, sure. Thanks so much for the presentation, Lizzie. I was wondering, could you talk a little bit more about the data accuracy? So where you basically getting your data from? You said like you have thousands of data points. Are you working with third-party companies together to gain the data? I'm sure like everyone here, at least from the investor side of things, talked with lots of food printing companies over the last years. How is your data in compared to startups focusing on one specific vertical, and also in terms of emissions from scope 1 to scope 3?
Thank you, Jonas. It's a really important question, because to be very clear, we are not a life cycle analysis company, right? We would never claim to be as detailed as a life cycle analysis, because scalable for millions of products, right? And so I want to make that super clear. We don't know third-tier suppliers. We're not on the manufacturing floor of these individual companies. We've found, I think, our sweet spot where we've gotten to get enough information while continuing to be scalable. And so where that information comes from is, yes, to your point, a lot of third-party data sources. So obviously the easy ones are if it's certified, right? If it's B Corp certified or Rainforest Alliance certified, we get that information. We have ESG data from S&P or other pieces of data. And then basically anything that's in an SEC filing, a sustainability report, anything that a company has claimed publicly, we will take into account. We will not take any information from companies unless it's publicly available, for two reasons. First, we're a team of 7 and we don't have the the capacity to sort of vet every single thing that's coming through just to us if it's not been published. And our assumption is, if it's been published in a reputable source online, that's good enough for us to go off of.
Okay, thank you. And another question would be, how many active users do you have at the moment?
We have 13,000 subscribers to our newsletter, and then we have 1,700 active users on our extension, which means that 1,700 people are coming and visiting the extension week over week for at least 4 weeks.
Okay, thank you.
For me, thank you for the presentation also from my side. A quick follow-up on the previous question. Is there any way for the companies to basically influence the algorithm in like publishing articles or publishing, as you said, sustainability reports about products?
Can you clarify, is there a way for them to influence it? Like,
so as you said, the algorithm is sourcing from the web or from public information, right?
mm-hmm.
So if they would just publish, let's say, a couple of articles that would like increase their sustainability rating for the product, or is that somehow fixed in the system?
I'm not sure I fully understand, but let me know if this gets at it. When a company publishes something that they've done, right? So their Scope 1 emissions, their disclosure to CDP, and anything sort of along those lines in the 6 categories that we rate in, we will take that into account. So yes, when they publish things, that will sort of improve their sustainability impact. Only once has it happened where a company has come to us and said, well, we're paying for carbon offsets, but we don't talk about it because we don't think consumers care. And our answer is, that's not our problem. Like, if you want to get credit for all the good things that you're doing from an environmental standpoint, you need to be more transparent, because the writing's on the wall, particularly Gen Z and millennials, but really any consumer is really starting to demand this type of information. And so that works out with us getting that type of data.
He's talking more about black hat SEO, where people create their own articles about themselves having great sustainability. I think it's probably more of an issue when it comes to Google because of that scale. Maybe in the future people would play that game, but you'd have to be pretty forward thinking.
It's not really an article. I mean, they can say whatever they want in an article, but unless it's data that's backed by, this is our source of our carbon offset and this is how we're certified, et cetera. If they say, we saved X amount over the past year, that's not helpful for us. We need deeper. That doesn't count as a data set. And so articles published doesn't really do much.
Okay. And then for the Chrome extension, is it possible at some point that it's platform so that you don't have to onboard Amazon, but it will just rate any product on any website, or? So
we have no partnership with Amazon. We've just rated their products. And so, yes, that's happening in real time. It's a lift for us from a technological standpoint to get on other sites, which is sort of what we're doing in real time. But we're able to do that right now. We basically only need, a product description, a universal code, and a couple of other data points, and we're able to rate anything on the public domain. So that's sort of our short term, is getting us beyond Amazon. And then also we know we need a mobile solution because plenty of people only shop on mobile.
Okay, cool. Thank you.
One question that I would have is, how do you scale up the growth on this? With something like this, I feel like you should be able to have really strong organic growth without having to have it be paid acquisition, because you're not going to earn a ton of money per user. How do you acquire mass users, and how do you get that word of mouth or that viral scale?
Yeah, we do have really good growth, organic growth. Our paid has been, relatively new and is just helping sort of overlay the organic. I would say, having targeted marketing around like finding people who shop on Target and then making sure that they know that this exists. The beauty of an extension is that once someone downloads it, they don't have to think about it again. It's not like an app that they need to remember to open. And so our firm belief is that we've gotten to the extent of our organic users for people that shop on Amazon. And once we expand to other retailers and we become more of a honey, and the co-founder of Honey is actually an investor in us, so we're closely partnering on that, then it will be much easier and a no-brainer for people to download it just naturally.
I just have one last comment before we hand it over to the next startup. This one's not so much a question, but I think the Bing partnership might be it might be overvalued, because the majority of people that use Chrome probably aren't using Bing, because if they're giving their data to Google anyways, then they would just go with Google because the search engine's better. So that might be something to, I don't know, potentially why you're having a lot more subscribers than downloads potentially.
But that's good, right? That then we're getting Chrome users and then Microsoft users because there's not an overlap. Isn't that a good thing?
But if they're using Bing, they're probably not using Chrome.
Why is it right? So we're getting two different, there's no overlap. So that's a good thing.
Okay. I see what you're saying. So that's why they're not downloading. Never mind. Scratch what I said.
Right, so they will download it because they can look on Microsoft.
Okay, well played. Touche. Very good. Very good. I want to move things on now to make sure our other companies of the night have some time to present. And now let's get back to carbon. Let's talk carbon, and let's get dirty with algae. Rohit, do you want to take over and tell people a little bit more about what you guys are doing with Equil?
I'll mute myself. There we go. All right, can you see that, Matt?
Yes, we see that. Let me just get myself and the other panelists out of the way so that you can take things away. You ready?
Yep, good stuff. Okay, thank you very much. Okay, so my name is Rohit. I'm building Equil in partnership with a couple of groups I'll tell you about in a second. We're here to solve climate, and we would like to do this by producing low carbon fuels and products that replace fossil fuels. And we also want to build sustainable ecosystems. Okay, so I myself have been in oil and gas for 25 years, and subsequent to that, I've been in climate for about 8 or 9 years. Equil is incubated by a company I have in Singapore. So Orm Energy, which you'll see on the slides, is fundamentally just an incubator. Equil, we will, I think, build either in Europe or the US. Europe is probably the most logical place given the sort of location of the markets that we aim to target. So we can talk about that a bit later. Okay. So that is, so Gracilaria is a strain of algae, and that's on the bottom right. And that just gives you a sort of sense of what we're looking to grow. Okay, here we go. Where is it? Okay. Sorry, just trying to work out. There we go. Okay, so just a few seconds on seaweed. So 10,000 species, red, green, and brown. None of them are poisonous. They're very quick to grow. You get very high productivity per acre, and you can develop a system, as we intend to, where you have monthly harvests. Okay, and in general, you're growing more biomass per acre than you are for most terrestrial plants. Okay, so seaweeds all around the world, durable, adaptable. Most ocean environments have a number of seaweeds in there. Valuable components, so combination of lignin, lipids, proteins and carbohydrates, much easier to manage and process than microalgae, an awful lot cheaper as well. So I think that's quite important. And as I'm sure you know, it's already quite a big business around the world. Okay, so on the left, you'll see a raceway pond. So this is our construct. We want to build a business where you're growing seaweed onshore. And the reason why we want to do that is that we believe that building a seaweed business offshore will hit a lot of marine challenges. And, you know, I've worked in oil and gas for a long time, so I know that anything you do in the ocean will be subject to corrosion and, you know, the impact of ocean currents and so forth. So why not build it onshore? Each of those ponds that you can see is called a raceway pond. It's typically 50 centimeters to a meter deep. And in our work, we believe that each 500-meter raceway pond would cost about $90,000 to $100,000 CapEx, and would allow you to grow 80 tons of dried ash-free algal biomass per year. So a ratio of 1.35 tons of CO2 per ton of algae, that's 108 tons of CO2 removed per annum. On the left, on the right-hand side, you can see Gracilaria has been grown in Oregon State. So just to give you a sense of what it looks like. And we have two models. One is a coastal model, which is like the picture, which is large, 9, 10, 15 square kilometers. So you're talking about the scale of, a large US farm, and we would absolutely look to sort of optimize, harvest, and produce in line with how farms are managed. But also, there's a strong potential around the world for niche applications for wastewater treatment. So algae is just fantastic at removing all the excess nutrients from water, as well as a lot of the metals and other contaminants. So you can use algae in a different non-food application that way. Okay, so I don't need to, don't worry, I'm not going to go into the slide in much detail, but just to show you that this is really a bio play, and you need guys like Greg Rohrer in Oregon to actually really help you understand exactly how to optimize at scale, how to maintain.
1 minute warning.
Oh, already? Okay, that was fast. Okay, so it's a bio play. Gracilaria, which is our chosen strain, is 30% protein, 70% carbohydrate. There's a lot of value, especially in the carbohydrates. Our primary focus is non-arable land and seawater. So a little bit of the US, a lot in North Africa, Middle East, India, Australia. We're raising 1.6 million now for the first half of our sort of pre-Series A work. After that, there'll be a $5 million sort of team building and scaling raise. Okay, so it's myself, NREL in the US, and Oregon State in the US. NREL are obviously biomass processing experts. Oregon State are cultivation experts, and I bring all this together. So we basically want to plug all of that together. We want to build proteins and bioplastics, but also explore pull from sustainable aviation marine fuel oil markets and become the largest seaweed producer in the world.
And your time is up. Thank you so much for sharing, Rohit. Great pitch. Incredible what you guys are doing. And also your carbon capture per ton is $5 to $10 per ton. That's the target you were going for, yes?
Sorry, hold on. I'm trying to find you. Where have you gone? Stop sharing.
It's a great question.
There we go. Yes, so the sources of value are primarily the products at the back end, but we would recognize that there is a nature-based sort of carbon credit that we may be able to accrue at the front end. If we are, and so without getting into, too much technical detail, depending on where you are, you may seek a different processing formula. So if you're sitting in, say, Australia, as an example, there may not be much local demand for proteins and bioplastics. They may look for, low carbon energy. So it may be that that's driven by sustainable aviation fuels, marine fuels, etc. If you're sitting in India, it would probably be the same. But the closer you get to Europe or the US, I think people would be very keen on exploring bioplastics and a protein upgrading story. And obviously, it's easier in those environments to raise the sort of high amounts of capital to do that. And depending on the processing, choice, again, you could end up with some processing residues and biochar, which would allow you to sort of sequester part of that carbon. But most of our story is around recycling carbon.
Very cool. Very cool. Thor, do you want to kick things off?
Thanks for the presentation. So what is the main business model here? Is it about carbon capturing, or what you're gonna actually do afterwards with the algae?
Yeah, it's selling the product. I think for me personally, if you're dealing with sustainable products, and I think your price range for, and I'm sort of normalizing this, and obviously the markets are very sort of stressed at the moment, but your price range for high value proteins, high value agar polysaccharides, and almost our sort of lower price would be for some of the fuels that we produce. You're sort of ranging from sort of $600 to $1,500 a ton. So you can compare that with the value of sort of sequestering the carbon. So, so I think maybe if we can get a credit, and I know that some markets allow you to sort of double dip, we would take that, but otherwise it's really about the products.
Okay, nice. And then you were talking about Africa as a starting hub for the plants, or where is it planned to implement the first?
Well, I like Egypt a lot, and I think there's just so you can't really see it on in such a short sort of presentation, but there are large swathes of non-arable land at the coast. So if you've been to places, Egypt, Oman, parts of Australia, India, you just need to fly over these territories to realize that, basically most of that sort of in those markets, the coastal geography is non-arable flat land near the coast. So we only need, 5, 10, 15, 20 square kilometers, which is easily available. It's fundamentally free land as long as you're not right on the coast. And again, I think you'd possibly not start in somewhere extreme like the Red Sea, where salinity and temperatures are a bit higher. But if you start off with somewhere like Egypt, Israel, North Africa, Morocco, places like that, those are places where the sort of temperatures are a bit more benign. And certainly in Egypt, there's a lot of high level of nutrients in the seawater as well. Same with India. And then your main challenge right now is to raise funds for the CapEx. What will be following that the cost of the production? Yeah, like so so there's two sort of raises. There's a sort of starting raise now, which allows us to do field trials, and we've been having quite a few discussions with Hatch and Hatch.Blue around doing field trials in Hawaii, which is quite a common place to start. Good all around weather. They have a lot of seawater ingress facilities, measurement labs, everything else. So that makes your field trials cheaper. So the sort of first 1.6 million allows you to build a small team, do all the field trials. A lot of that product then goes into the bioplastics guys and the protein guys who all want to see, hey, what is it that you're going to grow? Give me 20 tons of it, and so on. So that really validates your entire model. We're going to do quite a lot of LCA and sort of TA stuff around that time as well. And then once we really sort of started hammering the science out of the cultivation piece, then the next raise allows us to work with NREL to sort of keep on going with that optimization. And the interesting thing here is that if you can build a closed system, then seaweed has very short genomes, so you can actually bring synthetic biology into this. But it would have to be a closed system. You can't obviously, or you run risks of sort of, that sort of, evolved strain going back into the ocean. At least I think it's not something people would approve of. So we're conscious of that.
Cool. Thank you.
Shall I go next?
Yep.
Right. Rohit, so question on the technology itself and geography somewhat. So so this is going to be on coastal areas. How tides, low and high tides will impact it? Is there a risk of water spilling from ocean into these ponds? And also, what about, like, if I think North Africa, you see salt sort of lakes somewhat, or I don't know, ponds that spill over from the sea on the coastal areas, but they dry out. They tend to dry out during summertime. So
absolutely. So you get depending on where you are, you can get evaporation of 1 to 3%, per day on the pond. So you can imagine if you're in the Middle East, obviously there's going to be water evaporation every day, which also leads in some places to salinity buildup. So if you can imagine, you're typically going to be, say, 500 meters inland. You need to build a seawater ingress system. The walls of the raceways are maybe 1.5 meters high or something. So cross contamination, cross flow is a little unintended. That's contamination is not likely for you, and you'll basically build I think your key thing, so the thing to remember is that we're going to be pumping seawater from the ocean into these facilities. Thermal power plants today around the world take in 30, 40, 50,000 cubes per hour of water from the oceans, cooling water. We will just replicate that system. The engineering is all done. The impact on the environment is sort of very common. And effectively, you basically, in one point of your system, you have to have ingress and egress in at least 2 or 3 kilometers apart. So you're not just recycling the same sort of water, but you pick in the water, you bring in the water, maybe it's from 100 meters or 200 meters deep. And by the time it goes back into the ocean, all the sort of carbonate and bicarbonate material has been removed, and all the nutrients have been removed. So effectively, you clean the water. So the side impact is you prevent or help prevent ocean acidification. And all that sort of material ends up in the algae, which you then separate or you extract every month from the ponds, and then you do it again as a fresh cycle.
Right. And what about the intrusion into environment there? So into nature that's there. So and I'll explain myself. Some small animals that may live on coastal areas, or plants that grow there, and how would that link into regulatory permits? Are they required at all for this type of business? Is it regulated business?
Well, we've spoken to quite a lot of people in Namibia, in Oman, in Egypt, in Saudi. Certainly, there's a lot of strong interest in Saudi for this. We've spoken to quite a lot of people in India. If you're building something which is, say, 5 to 10 square kilometers, you will pick your site so there's minimal disruption. But in a strange way, a lot of people are very keen on us coming to those markets because they see this as a low carbon, sustainable ecosystem or industry, which creates a variety of jobs for young people. So you can imagine you're sitting in, say, Egypt, you have a bit of renewable power on one side, you build your system, there's good synergies between the system that we build and aquaculture as well. So a lot of your sort of agricultural residue, algal biomass can go and feed sort of prawns, abalone, which is quite common in places like Australia. And then obviously you've got your protein upgrading, your bioplastic. So it's fossil fuel independent. And that's why I think a lot of governments are going to like this kind of industry going forward. So we just have to find those places where there's very little biodiversity, very little land value, and people just want jobs. And that hopefully is a net positive for the environment.
Gotcha. And last question from me. So primary revenue generation will happen from carbon credits, basically, and not from sale of proteins, or right?
The other way around.
Right. So you're selling algae, but you're not producing proteins and whatever other products can be derived.
No. I don't think we will. So some people have asked us for whole algae, but I think the higher value output for us is to there's two options, and it's also around scale as well. So, we've been speaking to a few guys in the marine fuels business in the last week, and they're saying, the marine fuels industry, and it's the same for the sustainable aviation fuels industry, they are desperate for decarbonization options. So if you have something which is a pretty good feedstock like algae, it may be that for the first 2 or 3 years, all we do is we just sort of build to actually decarbonize those industries. And then as we build our skills, as we grow, then at the same time, the proteins and the bioplastic markets are growing in parallel, and then we can sort of feed into those. So as of today, I can't tell you, exactly which one I will grow first, but given the pull that we're getting from, the capital and the scale of potential sits in the short term.
Gotcha. But you're not going to develop bioplastics technology or protein production. That's not going to be in-house, right?
So what we're going to what we're thinking of doing is we feel that we were speaking to BASF a few months ago, and it's almost like the end point is $3,000 a ton. We start off with a cost of production around $200 a ton. If we can sell an intermediate that makes sense to actually export, and obviously it doesn't degrade, it doesn't have too much water content, and for sake of argument, if that's $1,000 a ton, that is a pretty good sort of handoff point to BASF. So that's the kind of strategy I think we'll take. We'll sort of go halfway down the road, but it could be in a few years' time, if we have a real market advantage and we have scale and capital, then we'll go off and build our own thing. But that's we want to solve one problem at a time. So the main problem to solve today is around scaled cultivation onshore. So we need to build a team. We need to hire a lot of PhDs, make sure we crack that, and then we can go off and sort of crack other problems one by one.
All clear. Thanks, Rohit.
Rohit, maybe one question from my side. As you're probably aware, like others are working with algae and seaweed also, and see obviously the great potential of it. Just in a nutshell, what's your competitive edge going forward?
Well, it's so two things. So one, it's interesting. So between NREL and myself, I worked for BP for over 20 years. We have a sort of scale mindset sort of thing. So it's about thinking, okay, this is large. We have a lot of appreciation around how to actually upgrade and process any form of biomass. So that's something. But the second thing I think is it's not just the scale potential. It's also the onshore thinking, right? So it's a slightly different mindset to say we are going to effectively create large onshore algal farms. But the third thing is that I think what the guys that I've come across in the algal industry, there's two problems for me. One is around MRV. So we're doing everything onshore. So MRV is very high. We'll be open book. You can effectively see everything. There's no sort of guesstimates as to what's going on. And the second thing is that I just think from a value add perspective, if your sole sort of source of value is an uncertain carbon credit story, then I think ultimately you'll get unstuck a little bit later on. So whether you're burying it a few meters below the surface, which I think is a question mark for some people, or trying to sink it and trying to work out exactly, what that means. Yeah, I don't think that's ideal. I think it's an easy short-term sort of story to sell people, but ultimately, we want to do something which has just impact all the way through. So to answer, maybe another question, which I think you've asked some of the other guys, is that, in an ideal world, I have enough money to do all of this myself, but I think just to make impact in as short a possible time frame, so that we can really support, climate mitigation, we will build a manual and we will license this out to, people who can afford to do it and who have the right credentials, so that we can just move quickly.
Thank you.
As a sort of business model, a sort of answer.
And what do you foresee your revenues being in that licensing rollout model if you do go that route, or as you transition?
I don't know. I'd take your advice on that, Matt. You know more about these things than I do.
Good answer. I hate when founders try to spin something out and just don't know. Figure it out later, because you don't know. You haven't played through.
I don't know yet. Yeah.
Mm-hmm. What's the biggest risk that you see right now?
Well, when we started off, actually, we thought contamination would be quite a big risk, but the more we've spoken to Oregon State University, they feel that contamination is not a risk because of the high level of alkalinity that you generate in the ponds, plus the fact that most of your contamination is bio-based anyway, so you can actually just process that, and so that's something. I think it's maybe also a vision risk. If we are talking about doing something that people haven't done before, because maybe they just haven't thought about it, but each of my facilities might have somewhere between 200 and 1,000 ponds, and each pond is 500 meters long, 10 meters wide. So I need sort of the market to understand there's nothing really essentially complicated or impossible to do around this. If we have AI and drones and an awful lot of sort of sensors, then effectively what we're doing is we're just copying what a large farm does in the US, right? So we need to bring those principles on board, and we just need to be able to envision that we can build this up in that kind of scale, where each project is maybe $200 million at full scale. And the one nice thing about doing this, Matt, is that you can build a pond a day. It's not very complicated to actually build a pond. Just sort of 1.5 meter high walls, bit of plastic lining at the bottom. You flatten it, feed it with seawater. Then you're almost done. We'll probably have a mesh system in that. So in that notion that it's $100,000 to build a pond, approximately, and once you're up and running, you can actually potentially sort of get into a fractional funding model where somebody likes what you're doing and they'll say, I'll pay for the next 50. So that's also one way of sort of expanding quite quickly. So maybe it's a bit like a solar or renewable project in that context, is that you get your first few up and running and then you effectively parcel the next ones out so you can move quickly.
Gotcha. Well, I would certainly have more questions, but I think it's time we move on to our last startup of the night to make sure they get some time as well. I'm sure people in Europe are getting hungry. So we have Raid Arab with MAXUN Solar. You want to take things over, Rad, and tell us a bit more about what you guys are doing?
Yes. Thank you.
Give me 1 second to get you in the driver's seat. You can get everything all queued up. And if this is your first time while I'm getting everything queued up, this is the Startup Tank. If you haven't subscribed, thestartuptank.com/YouTube to subscribe. And this is all presented to you guys by Forward VC's Climate Syndicate.
Please just, I want to bring my screen to the front here, so I'm looking at you while I'm presenting. Okay, we're ready, Matt?
Ready to go. 5 minutes starts now.
Thank you. MAXUN Solar is a game changer for the solar industry. We are a company that comes to the mature market, the solar market. Basically, what we do is we are the first company to deliver dual axis tracking on the roof. That by doing that, we I'm sorry, we doubled the output and the energy capture from the roof. So this is our, should be in presentation mode. In this video, you see that we do a low profile dual axis tracking. Sorry about that. With 60-degree tilt in every direction. So this is our core technology, which is the dual axis tracking. Predicated on that, we will have two products: the iPyramid 1P, which is the electric-only system that gives you 50% more energy from the same rooftop to a full 2 times more energy. And later on, we'll have the cogeneration system, which is gives you simultaneously electricity and thermal energy at 3 times and a half the standard fixed tilt solutions that are done right now. The team is I have 30 years of experience, 15 years of which in the solar business. I'm the president of an EPC company that catered to residential, commercial, and utility scale. We know the solar business inside out from the financial and the customer needs. Our CTO is Mr. Dr. Bruno Rocha. He's a professor of mechanical engineering, and he was the key behind the full integrated solution. We have an extended team of legal, intellectual property, and marketing, and we have an astute advisory board that are very active in the company. The iPyramid 1P, I'm going to get to the products. So it's a turnkey solution that comes fully to our customers. It includes, it utilizes standard solar panels, but the only advantage is we have our own what's called chip, shade mitigation chip. It's a turnkey solution that generates, like I said, 2 times more energy from the same rooftop. So where is the advantage is this is solar is very local in nature. The iPyramid 1P generates 80% more energy in Ottawa than standard solar. So it costs 30% more, yet it gives you 30% less kilowatt hour cost, and that's what's most important. We address not just the electricity side, the increased energy side, but our next product, which is the iPyramid 1C, addresses the escalating carbon price of natural gas. Natural gas buildings emit 40% of all carbon, and that's due in large to natural gas. And with that, so the iPyramid 1P is a different product, is a concentrating product that is built on proven technology and cells that are used currently on satellites. They are 40% efficient compared to the 20% solar panel technology. And with that, we would capture 35% electricity and 50% thermal. So 2 products, both different flavors. And the first one to go is the iPyramid 1P. We have 2 granted patents and 1 pending, very important one right now for international.
45 seconds.
Wow. So our model is to make the system and sell it. Okay. So with having third-party suppliers, our model is to make 50 cents to 75 cents per watt. And we have 10x sales plan. And the most important is we have currently 1 megawatt order from Enbridge, which is the largest gas supplier in Canada, with another small order to be fulfilled in Q4 2022. Our exit strategy is to reach the 1,000 megawatt at $500 to $750 million earnings. We are looking at the company valuation of $10 to $20 billion. We are seeking $2.8 million in equity, and to fulfill that first order that's coming our way and close and the next 10 megawatt.
Time is up.
Sounds good.
And that's 10 to 20 million for the valuation, right?
Yes, the valuation. Yes. Basically, it's 10%. We're talking 2.8 for 10%. Yeah, $20 million.
Awesome. Let me pull in our investor panelists and let them take it away. Jonas, you want to kick things off this time?
Yes, thanks so much, Raid, for the presentation. I have several questions. Some of them you mentioned quickly already in the presentation, but first IP. Have you developed the IP yourself? You said you were holding patents. Could you just elaborate a little bit further? What kind of like what is the patent, which technology exactly is patented in future, and where is it registered again?
Okay, so the first two patents are registered in Canada, and all patents are developed by us, and they are owned by us. So that's the first two patents they talk about. They were granted 2012, and therefore the last patent is our most critical patent, because that's the one we want to take internationally, and part of the funding is gonna go forward for taking the IP public as well. Not public, sorry, international. So it covers the full mechanism. This is where our advantage is. We're the first company to deliver modular dual axis tracking with deep angle tracking, and this is extremely important. So, and we want to protect this in North America and worldwide. Did I answer your question?
Yeah, definitely. Then I would have another one regarding go-to-market. Maybe you could elaborate a bit further on what's your beachhead at the moment. You mentioned a pilot customer. I would have thought it might be B2B commercial real estate, for instance. And also, what's your marketing strategy there? Because in the end, I mean, you worked yourself in the solar space for quite a while, so you're competing for the same customer, I would argue.
Definitely. Thank you. That's an excellent question. Basically, what we want to do is we want to become just a manufacturer. My experience from the solar is, being an installer and how we know about products and so on and new products. So at the end of the model is we want to be a supplier of equipment. So just an equipment supplier. There could be another company which is, which is going to do the energy as a service. Okay, but one company, MAXUN, is going to focus on making the systems and selling the systems. So how are we going to sell them? Initially, the model is direct sales to B2B, but until we reach about the 10 megawatt, 100 megawatt range. But then it's the distribution, just like we do right now, under my other APC company, we buy from distribution and directly from manufacturers, whether it's racking, panels, or inverters and so on. So the only thing is our system is a complete turnkey solution. So it's one system that you buy and you install. Okay. Did I answer your question?
Yeah, I think we could elaborate further, but maybe last question from my side. Do you have on-site data points on the efficiency gain you're advertising?
Definitely. Okay, so right now the solar panels, the first 10 kilowatts is coming out in the next, like I said, in Q2 22. Okay, which is in the next 2 to 3 months. So this is our first 10 kilowatt, and the next order is 1 megawatt. We've completed the mechanical engineering system, complete with mechanical, software, and electronics. So the data comes from simulation data, our own simulation data, and existing certified tools of simulation. On the iPyramid 1P, on the code generation, we got certification from third party on the single cell and on the thermal from University of Ottawa. Okay. So that has to be combined into the full two products.
You guys have so what's the warranty you guarantee the customers? Like, for how many years do you ensure that the product is going to work?
We're going to offer very similar what the market is expecting. Generally speaking, on solar panels right now, it ranges. Some companies is 12 years, and the others they do 20. So for us, the iPyramid 1P is basically we use third-party manufactured panels that are guaranteed by them. We only guarantee the mechanical system. The mechanical system utilizes automotive technology, and it basically does a small turn every day. So it's very and it's designed to live it'll live for 40 years according to our simulations. So that's the inverter is also a third-party item. So, but we combine all these in one bundled solution that is guaranteed into the standard solar market to acceptable standards. Okay.
And then you source the panels in China, I guess, or?
Initially, yes. Okay, initially, yes, for the first small amounts, but after that, we're going to bring that in-house because it's not a major capex to set up a solar panel manufacturing.
Okay.
Our solar panels are 3x3, so it's a very and it has our own wiring basically to mitigate shading.
And then one more question for the energy output. Is there a way you can directly funnel it into your let's say wiring system in the company, or do you have to fill it into the grid first?
We are just like any solar system that is being installed. So it's either you net meter or how we use the energy. It's according to your lake. So you can store it in batteries. You can do anything. You can convert to heat. One of the main thing we are focusing on and what we see from our customers, not just Enbridge and all the others, is the fact that everybody wants to displace the carbon footprint of natural gas. So heat is industrial applications and building heat for buildings.
Nice.
Okay, so and this is where our cogenerate solution is very attractive to a lot of end users.
Do you see any problems with the supply chain shortages right now, or do you have them? Okay. It's getting just better. I mean, things are taking longer and the cost of shipping. Therefore, our manufacturing is going to be in North America, where we take advantage of the Biden announced. So we can have 100% made in North America. So we are a formidable solution to that can take advantage of all the funding that is available, $370 billion. Cool, thank you.
How do you have maintenance costs weighed into the system itself? The more moving parts, the more complicated it is, especially, I don't know if you guys have done studies in the Northeast where it snows, but it snows and it freezes. How does that work with MAXUN?
Absolutely. This is an excellent question. Our existing system has been on the roof for the past 2 years. So the only moving system that is the motors, actually, 2 motors per unit. So our system actually, it's an advantage for us to be in northern climates, especially where there is snow. Generally speaking, solar panels, they get covered by 1 inch or 2 inches of snow, and they're out of, they don't generate anything. The cogenerate solution, tilt 60 degrees, we knock off snow. At the same time, it's 18 inches above ground, so we are not prone to snow accumulations, mild snow accumulations. We had a massive tornado. The system is still running this summer. And at the same time, we had a 50-centimeter dump in Ottawa of snow, and that covered the system. So, but for mild snow accumulations, our system actually has that extra advantage in colder climates. In terms of what could go wrong, and the only thing is, or the moving parts, and there is no maintenance. It's a standard maintenance on solar. So we have, like I said, each unit has 2 motors. They're guaranteed by the suppliers to us for 10 years. And they are very easy to replace. And replacing parts on a flat rooftop is a much easier deal than, let's say, on a slanted rooftop or something like that. So and we will as we become our volumes increase, we will negotiate a 20-year replacement cost on the motors, and they should last because we only do a very small rotations every 15 seconds. It's a small tick actually that tracks the sun.
Does that prevent them potentially from freezing then if they are constantly in motion?
They don't freeze, actually. There is no freezing. They've been running in Canada in minus 30 degrees Celsius for 2 years now. So we have that data about how they perform. And with the cogeneration, as a matter of fact, even if there is an ice storm, which is ice accumulation, we bring back the thermal energy into the system to defrost the system, for example.
Okay. And now I want you to answer this next one immediately off the cuff. Elon comes to you tomorrow and offers you $100 million to buy the company. What do you say?
We'll think about it. Well, 100 million. I mean, we know at 1,000 megawatt, and the market is 250,000 megawatts. So if we achieve 1,000 megawatts, the company should be valued at 10 to 20 billion dollars if we take the company public. So it would be that's a tough question, Matt. That's a tough question. Definitely, I want to take the company all the way to full IPO if we can. Okay, that's my aim, is to make it happen. I know we have the experience to sell and the manufacturing and the know-how to make it happen.
What's your weakness then?
Weakness is weakness. Supply chain is one of the weaknesses, and that's why we have to bring it home. So we're working on that. Again, we have to move away from ordering stuff in China. So manufacturing of aluminum and steel, we already Alcoa in between Canada and the US, right at the border. That's where our factory is going to be. So that's our plan to address supply chain. Okay. And of course, sourcing out people as well. This is one main thing. Right now, we are just gearing up to increase with this round of investment, is to beef up our management team.
Awesome. Well, thanks for presenting. Any other questions from our panelists?
I'll ask one question, and that's in regards to investors. So what would you see as suitable investors coming in to this round to finance you? Because this is very much execution play, right? As you mentioned, so supply chain and maintenance that Matt mentioned, and obviously it's infrastructure build out. So whom do you see as suitable investors here?
We right now we're looking for equity investors. Our minimum round, I mean, it's the $2.8 million. So equity, whether that is family investors, whether that is a VC as well. We are open to any investors, even angels. We prefer to have $250,000 investments and the smallest. Okay, so we don't have a large pool of investors, but generally somebody, maybe there's a strategic investor as well. That would be ideal as well. And in the solar panel manufacturing as well. So yeah.
Okay, thank you.
Even automotive industry, there could be a strategic part, because we're going to make a lot of, all our parts are, on the tracking is metal and gearing and so on. So, which is very simple, by the way. So, but it's, patented, and we want to make it, that's going to be made by third parties. So it could be a strategic partnership with a metal manufacturer.
Okay, thank you, Rob.
All clear. Then thank you for presenting. You did an incredible job. But now we need to move things over to the last segment of the night, and that is our climate startup of the night. So we have 4 panelists. Each of our panelists is going to go and say their first, second favorite company, or the top 2. Who are you guys most interested in setting up follow-up meetings, possibly investing in? Who do we choose as our climate startup of the night? And Lily, I'm going to let you go first this time. Does that sound good?
Thanks, Matt.
No pressure.
Right. So I'm totally impartial. No, all good. Thanks, everyone. Really great startups, great solutions and technology, very innovative. It was great hearing you all guys. And now, obviously, I'll speak from my perspective and my personal experience. There are the startups coming our way. They are from sectors that number of startups presented their solutions tonight, and hence I know that spaces like biofuels and renewables, solar energy are very competitive spaces, and hence scaling up may be a very tough journey. Hence, I thought that the most innovative solution, at least from my perspective, was second startup, and it was Eric who presented it. I'm sorry, Matt, I forgot the name of the startup.
GenHydro.
Here you go. But so really promoting a circular economy, using scrap aluminium, and I understand targeting clients which have it to be used, and then producing energy and hydrogen from that. Again, I'll caveat it straight away. The carbon intensity of the process would need to be investigated, and I'm not sure I totally understood that aspect. But from the sound of it, it's a truly innovative technology, and I would be actually interested to explore further.
Thor, you want to go next?
Yep, I actually also, as the first one, have GenHydro. I think for me, also, I don't fully understand it, so that's what it makes it most interesting, and definitely interesting to explore more there. And then my second one would be, I think, Finch, because of the scalability, and I think the importance of information for consumers. And I think there's a lot of potential in scaling it.
And Jonas, I'll let you go next.
Sure. First of all, thanks so much for all the presentations. It was great meeting you. I have to mirror both of my colleagues. I also think that GenHydro was for me the best presentation. I believe that their reactant-based approach could be quite promising. Also, the co-generation of electricity and the potential cost effectiveness of it makes it appealing in combination with your current traction, Eric, with the pilots you have in your pipeline. I would be interested to learn more about it.
I think that makes it a consensus sweep. Then I would choose GenHydro as well as the favorite. Now, to caveat or add context, it's also not 100% fair because they are a bit further along than the other companies. All the companies here are doing incredible things, but yeah, for me and for us personally, GenHydro is the most interesting. It's a little too late stage for Forward VC Syndicate, but they would be the ones that I would be most excited about. I find all of the other companies to be pretty interesting, some to be a little bit early. I like what TeknTrash is doing, especially from the phone call I had with them. If they can get the incentives right, then there is real value there to getting more consumer adoption on the recycling side and the value for CPG brands. But for me, yeah, GenHydro would be the winner. Well, congrats, Eric. If you have any last words, so to speak.
Yeah, just humbly, I really appreciate your time, and it was just very exciting to just hear your thoughts and your feedback. To kind of have a unanimous, I guess, sweep. I guess it was very, very humbling. I really appreciate it. Excited to definitely connect with you guys further and help answer any questions, especially around the carbon intensity and what the economics look like, which we have performers built out. I know maybe Matt, you might feel like we're a little late stage, but the company honestly has only been around 14 months too. So we've just accomplished a lot in a short period of time. Got lucky with some good staff, good team. But I appreciate the opportunity, everybody, and look forward to catching up.
Awesome. Well, thank you. And thank you to all of our incredible founders tonight. You all put it out there, 5 minutes of pitching on the tank with the investors, getting deep into the businesses of, I mean, these are your kids and people are kind of ripping them apart on live streamed YouTube and LinkedIn. It makes things tough, but you all did incredible. I hope you're all successful. For some resources that might be helpful, Forward VC's got a VC database, 600 plus funds, incubators, accelerators. You can search by stage, sector, geography, etc. Just visit our site, 4ward.vc, the number 4ward.vc, and you'll find more details. I want to give each of our investor panelists a quick chance to wrap things up, tell people where to find them before we hopefully all go grab some dinner. I guess I need to kick it off. Okay, Jonas, you're up.
Sure. Yeah. Best way to get in touch with me is probably over LinkedIn, Jonas Hornung, or over our website, vventure.de. Probably the best way to send us your pitch decks.
Awesome. And Lilia?
Yes, same thing. So best to reach out to me via LinkedIn. And then if you want to speak to or get in touch with others in Shell Ventures, visit the website. It has our team members there.
Very cool. And Thor, you are up.
Same for us. Like, we try to put a lot of work on our LinkedIn page, post some articles, also focusing on female founders. So we always really like to support female founders, of course, because it's very important. And yeah, you can look through the LinkedIn and then contact us there or send us an email.
And for more about us and to apply to a future segment of the Startup Tank, visit thestartuptank.com. It's exactly how you'd think it's spelled. You can apply to pitch to incredible investors like this. We do this every 2 weeks on Mondays with some of the biggest and best investors in the space. And to learn more about us and what we do at Forward VC's Climate Syndicate, or to apply for funding, or to join our Climate Syndicate and invest in some of the awesome companies that are changing the world, that's forward.vc, the number forward.vc. And out there, founders, investors, climate techies, and nerds, if you want to network with other people in the space, we've got a climate tech Slack group for you. Just the startuptank.com/Slack. You can hop on in there and join almost 300 other climate tech founders, friends, investors, etc., and hopefully find some good partners to move the world forward. This has been another filming of the Startup Tank. Hit the subscribe button if you're on YouTube. If you're on LinkedIn, you can subscribe to our newsletter, and we're on all your major podcasting platforms. So hit the subscribe button and leave us a review to help us get more exposure to great companies like this, so they can change the world, because they're the ones that are doing big things. Thanks, everybody, and thanks for tuning in. Cheers.
Thanks, everyone.